What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is absolutely electric right now, moving faster than a lightning bolt, and if you're not plugged in, you're missing out. We've got a whirlwind of updates that could reshape the landscape, and you need to know what's going on. Get ready for the hottest takes and the most crucial information that's dropping today. Let's dive straight into the action. First up, we're talking about Bitcoin dominance dipping below that massive 60% mark. What does this mean for the highly anticipated 2025 altcoin season? Could this be the green light we've all been waiting for? We're breaking down the signals that suggest a massive shift is underway, potentially unlocking huge opportunities for altcoins. You don't want to miss this deep dive. Next, we're seeing a seismic shift on Binance as Bitcoin whales are making their presence known. The average deposit size has surged to a staggering 13.5 BTC. This isn't your typical retail activity. This is big money moving, and it tells us a lot about where the smart money is heading. We'll explore what this whale migration means for the current market dynamics and the future price action of Bitcoin. Is this a sign of accumulation or something else entirely? Then, the crypto market is feeling the heat as Bitcoin faces renewed selling pressure, pushing it below critical support levels. We're seeing jitters across the board, with Ethereum and XRP wobbling in the crossfire. Is the market heading for a steeper correction, or are these just temporary dips? We'll analyze the technical indicators and on-chain data to understand the sentiment and potential next moves for these major cryptocurrencies. Stay locked in to find out. And finally, we're looking at short-term holders and their potential to dictate Bitcoin's next move below 110K, with key support levels being tested and volatility on the horizon. Understanding the behavior of these holders is crucial. We'll unpack the data that could signal a major shift. Stick around for all these critical updates and more. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an episode. Let's get it. Bitcoin dominance below 60%. The green light for 2025 altcoin season. Could this be the signal we've been waiting for? Bitcoin dominance has officially dropped below the crucial 60% threshold, a move that many analysts believe is the definitive green light for the highly anticipated 2025 altcoin season. This isn't just a minor fluctuation. It's a significant indicator that could signal a major shift in market sentiment and capital allocation, potentially unlocking unprecedented growth opportunities for a wide range of altcoins. For months, the crypto community has been buzzing about the potential for altcoins to outperform Bitcoin, and this dominance drop is being seen as the catalyst many have been anticipating. Historically, periods of declining Bitcoin dominance have preceded massive altcoin rallies, where smaller-cap cryptocurrencies experience exponential growth, often far surpassing Bitcoin's gains. This trend suggests that as Bitcoin matures and stabilizes, investors increasingly look towards altcoins for higher returns and diversification, seeking out innovative projects with strong fundamentals and disruptive potential. The current market environment, characterized by increasing institutional adoption and a growing number of sophisticated retail investors, is ripe for such a rotation. As more capital flows out of Bitcoin dominance and into the altcoin market, we could witness a broad-based expansion, bringing new levels of excitement and opportunity to the entire crypto ecosystem. This development is particularly significant when considering the specific metrics and historical patterns that often precede these altcoin booms. Analysts are closely watching the flow of capital and the performance of various altcoin sectors, looking for early indicators of which projects are best positioned to capitalize on this potential shift. The narrative around Bitcoin dominance has always been a key barometer for the health and expansion of the broader cryptocurrency market. A sustained move below 60% could confirm a long-term trend of altcoin outperformance, setting the stage for a dynamic and potentially lucrative period for investors willing to navigate the increased volatility and research required to identify promising altcoin opportunities. This is a developing story that could define the next major chapter in cryptocurrency's evolution, and understanding the implications of Bitcoin's waning dominance is absolutely essential for anyone looking to capitalize on the market's next major move. The potential for altcoin season is not just a talking point anymore. It might be unfolding right before our eyes, driven by this significant shift in market structure. The implications for portfolio diversification and risk management are immense as investors recalibrate their strategies in anticipation of what could be a transformative period for the altcoin market in 2025. The excitement is palpable, and all eyes are on the charts as this pivotal moment in crypto history unfolds. But is this the only major shift happening in the market? We're also seeing some serious whale activity that could tell us even more about where things are headed. Stay with us. Bitcoin whales take over Binance. Average deposit size jumps to 13.5 BTC. Big players are making waves on the world's largest exchange. In a significant development that could signal a major shift in market dynamics, on-chain data reveals that Bitcoin whales are increasingly dominating activity on the Binance exchange, with the average deposit size surging to an impressive 13.5 BTC. This trend marks a departure from Binance's historical reputation as a predominantly retail-focused platform and suggests a growing preference among large-scale investors for its deep liquidity and efficient execution capabilities. Historically, a lower average deposit size on an exchange typically indicates a higher proportion of retail investors, who tend to move smaller amounts of Bitcoin. However, the recent spike in the 7-day moving average of Binance Exchange inflows to 13.5 BTC per transaction, as highlighted by CryptoQuant analyst Martin, points towards a substantial increase in whale-sized transactions. This influx of large deposits signifies that major players are actively utilizing Binance to manage significant portions of their Bitcoin holdings, likely to execute large trades without causing significant price slippage. The implications of this whale activity are multifaceted. For one, it underscores Binance's continued dominance as the go-to venue for high-volume trading due to its unparalleled liquidity. Whales require an environment where their substantial orders can be processed smoothly, and Binance, with its massive trading volumes, provides exactly that. This shift also suggests a broader trend of institutional and large-scale players becoming more involved in the cryptocurrency market, seeking out the most liquid and accessible platforms to navigate their significant capital movements. The contrast with earlier in 2024, when the average deposit size was around a mere 0.8 BTC, further emphasizes the dramatic transformation occurring on the exchange. This influx of whale activity occurs at a critical juncture for Bitcoin's price action, which is currently testing key support levels around $110,000. While the increase in whale deposits could indicate confidence and strategic positioning by large holders, it also adds a layer of complexity to market analysis. The market will be watching closely to see how this increased whale presence influences price movements and whether it aligns with broader accumulation or distribution trends. The fact that these large players are choosing Binance specifically highlights the exchange's infrastructure and its ability to cater to the demands of the most significant market participants, reinforcing its position as a central hub for global crypto trading. This evolving landscape on Binance could set new precedents for exchange usage and whale behavior in the years to come. But the whale activity isn't the only pressure point for Bitcoin. We're seeing broader market jitters that are impacting other major cryptos too. Next, we'll break down the sell-off affecting Ethereum and XRP. Crypto today. Bitcoin sell-off sends jitters across the market, Ethereum, XRP wobble. Market sentiment turns cautious as Bitcoin dips below key price points. Cryptocurrencies are currently navigating a period of heightened pressure, with Bitcoin, BTC, struggling to maintain its footing below the crucial $110,000 mark, sending ripples of uncertainty across the broader digital asset landscape. This renewed selling pressure comes ahead of the pivotal month of September, a period often watched closely for significant market shifts and potential economic indicators. Attempts to sustain a recovery for Bitcoin have been met with resistance, indicating a prevailing risk-off sentiment among traders and investors. The decline below the 100-day exponential moving average, EMA, at $110,852, and the psychological support level of $110,000 has amplified bearish signals, with technical indicators like the Moving Average Convergence Divergence, MACD, on the daily chart displaying a sell signal. This suggests that the bearish momentum could continue unless significant buying pressure emerges to reclaim key resistance levels. The Relative Strength Index, RSI, also shows a downward trend, approaching oversold territory, further affirming the reduction in buying pressure. The situation is not isolated to Bitcoin. Altcoins are also feeling the strain. Ethereum, ETH, the second largest cryptocurrency, is experiencing a notable correction, particularly after its recent run-up to record highs. While ETH remains above the $4,300 support level, the downside risks persist, fueled by profit-taking and the general market downturn. Similarly, XRP has seen its support at $3 falter, leading to accelerated declines below its 50-day EMA at $2.94. The overhead pressure on XRP suggests a continued risk-averse sentiment as traders prioritize capital preservation. In contrast, the underlying fundamentals of the market remain a point of interest, with Bitcoin spot exchange-traded funds, ETFs, in the U.S. continuing to attract steady inflows. On Thursday, BTC spot ETFs saw inflows of $179 million, marking the fourth consecutive day of positive activity, with ARK Invest's ARKB leading the pack. Ethereum spot ETFs also extended their bullish streak with $39 million in inflows, although this represents a slowdown from previous days. These ETF flows provide a counterpoint to the short-term price action, suggesting underlying investor confidence in the long-term prospects of these digital assets, potentially influenced by anticipation of Federal Reserve interest rate cuts in September. However, the immediate technical outlook for both Bitcoin and Ethereum points towards continued consolidation or further downside risks if key support levels are breached. For Bitcoin, the $109,000 pivot zone is critical, with a weekly close below this range potentially accelerating a correction toward the $107,446 month moving average. For Ethereum, the path of least resistance appears downward, with a target of the 50-day EMA at $3,952, unless bulls can defend key support levels and push for a reversal. The market is closely watching these levels to gauge the next significant move. While the big players and the broader market are certainly making headlines, there's another group whose actions could be just as impactful on Bitcoin's immediate future. We're talking about short-term holders. Stick around to see what they might do next. Bitcoin news today. Short-term holders could force Bitcoin's next move below $110K. Understanding short-term holder behavior is key to Bitcoin's next directional move. Bitcoin is currently navigating a critical juncture, trading below the significant $110,000 support level, which is raising concerns about potential short-term selling pressure. This downward pressure appears to be influenced by a combination of profit-taking among investors and the behavior of short-term holders who may be facing break-even risks. According to Glassnode's latest analysis, investors' cost bases have been under considerable pressure over the past 6 months. Short-term holders, typically defined as those holding assets for less than 155 days, are increasingly looking to exit their positions at break-even points, creating a ceiling of resistance against any upward price retracements. Technically, Bitcoin has fallen below key on-chain realized price levels, including the 1-month realized price at $115,300 and the 3-month realized price at $113,700. However, a significant support level remains at the 6-month moving average, currently situated around $107,440. Analyst Axel Adler points out that the $100,000 to $107,000 range is a confluence of the short-term holder realized price and the 200-day simple moving average, SMA. These are historically strong defensive zones that have provided support during previous bullish cycles. A decisive breach below the $110,000 mark could trigger a more substantial test of this critical support band. Data indicates that the cost basis for these short-term holders is currently above $108,500. If Bitcoin's price were to dip below $100,000, it could potentially spark widespread selling pressure from this cohort, exacerbating the downturn. These investors, who have accumulated Bitcoin since the April dip, represent approximately 8.82% of the total supply. Their decision to sell at break-even points or even at a loss could significantly impact market momentum. In contrast, long-term holders, those who have held Bitcoin for over a year, continue to maintain strong positions, exhibiting resilience despite market fluctuations. However, there are some signs suggesting a potential capital shift from Bitcoin towards Ethereum among these long-term holders. The $93,000 to $110,000 range is also being closely watched as a potential accumulation floor, particularly by institutional and large-scale buyers during the late 2024 rally. This zone has matured as a support area and could provide stability unless sustained selling pressure leads to capitulation. Meanwhile, the 50-day and 100-day SMAs at $111K, $116K have now transitioned into resistance levels, reflecting increased selling activity and the failure to reclaim previous highs. Analysts remain cautiously optimistic, citing strong underlying fundamentals like institutional adoption and declining exchange reserves as supportive factors for Bitcoin's long-term trajectory. However, the immediate focus remains on the $109,000, pivot zone. A weekly close above this range could reinforce the bullish trend, while a close below it might accelerate a correction. The upcoming weekly options expiration event also adds a layer of anticipated volatility to the market. So, we've covered Bitcoin dominance, whale activity, market jitters, and short-term holder pressure. It's a lot to digest, but what does it all mean for the average investor? Let's quickly recap the biggest takeaways and what you need to know moving forward. All right, crypto fam, that's a wrap on today's essential updates. We saw Bitcoin dominance drop below 60%, potentially signaling the start of the 2025 altcoin season. Then, Binance experienced a surge in whale deposits, with average transactions hitting 13.5 BTC, showing big players are active. We also covered the market jitters as Bitcoin dipped below $110K, impacting Ethereum and XRP, and discussed how short-term holders might influence Bitcoin's next move. Don't miss out on the next wave of information. Hit that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto insights, ring that notification bell so you're always in the loop, and let us know your thoughts in the comments below. For even more market analysis and breaking news, follow us on all our social media channels. Stay informed, stay invested, and we'll see you on the next one.